Bitcoin whales continue to sell on the retail investor. Are you buying Bitcoin or are you selling Bitcoin? Are you following the money or are you following the moon boys? Let me know in the comments down below. In this video, we're going to be jumping down into the data of BTC. We'll be taking a look at what's been going on with the on-chain metrics for Bitcoin, where the money is flowing, where the Bitcoin is flowing. We'll be taking a look at a few of the macro price charts and get a good bead on where I think things are likely to go at a macro scale. As I get into this video, if you find it useful and informative, do hit that like button for me. I really do appreciate that. Help spread the content to more like-minded individuals. And if you're new to the channel, why not consider subscribing? By subscribing, you will stay up to date with everything that we do here at Cheeky Crypto. And don't forget, guys, if you're not joined us in Discord, linked in the description down below. It is a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. If you're looking for more from the crypto space, we do offer memberships via Patreon and here on YouTube via the join button down below. Why not click those if you're looking for a little bit more? Okay, let's make a start. Now, this is a chart that I've drawn up about a year or so ago. It's something that I show from time to time. It kind of breaks down everything that's kind of been going on in Bitcoin history. We kind of have to park Bitcoin history to a point though, because we have done some new variables, or we've introduced new variables to Bitcoin's history, things that hadn't happened before. And therefore we cannot simply look at what's happened in the history of Bitcoin and blindly assume that we're going to be doing the same thing again when we've introduced these new variables. Okay, and I've spoken about them before. I'll quickly summarize them now before we get into the on-chain data. So the first thing that we need to acknowledge is that in 2013 all-time high, 2017 all-time high, when we had our initial bear market, we dropped down 67% over here, okay, in the 2014 initial crash. It was 133 days, okay, and we dropped down 67%. In the 2017 all-time high, we had a 69% crash. It took 56 days for that to happen. Now, that in itself is okay. It's impressive. It's not anything unusual when we look at these two things side by side. I think our initial pullback was about 56%. Let me actually just zoom in and just quickly cross-check that. I do want to make sure that I get this as accurate as I can for you guys. So we'll go in here and pull that down. 52%. Okay, so 52% is kind of what we had previously in the 2021 all-time high. And it took a little while. It wasn't anything major, but it was a 52% pullback. Now, that in itself is okay. So that's the initial kind of, drop that you had after the all-time high. What's more important, the new variable that was introduced in our 2022 bear market, was the fact that what we saw was in 2014 into the 2015 bear market low, we saw price react to the 1.236 fib level. This is pretty typical of a three-wave structure, right? So when you have kind of like a C-wave structure, it usually typically lands, and it's not a hard and fast rule, but it typically lands between a level of 1 and 1.236, right? It's between those two levels. It doesn't normally pierce above the 1.236. Only usually under extreme circumstances does it do this. And normally when you do move past the 1.236, it actually tends to turn more into a W, X, Y, X, and Z. Okay, so it's important that we kind of make these distinctions from an Elliott wave theory point of view. Now, in 2017, we had a very similar situation. We landed between the fib levels of 1 and 1.236. These two bear markets were very, very similar in the way that they behaved, right? Whereas what we've seen so far is actually something quite alarming. It's different. It's a new variable, okay? And that is that we pushed past the 1.236, and we, in fact, pushed past the 1.382. We were between the 1.382 and the 1.618. So we haven't dropped down low enough to kind of trigger out an impulsive trend move to the downside, but we are deeper than the typical 1 to 1.236 fib levels. And this is something that is new. This is something that hasn't happened in Bitcoin's history. So we can't just look at Bitcoin's history and assume that we've bottomed out because, we've come down, to a certain number of days or whatever. It's important that we actually acknowledge what these fib levels represent. This represents people's behavior and how people are going to behave and react to price movements going forward. So we can't just blindly believe that we're going to be going up into a new bull market when we've introduced this new variable. But we can go deeper than this, because there is another variable that was also something new that hasn't happened in the history of BTC. And this was that we actually pushed down lower than the previous all-time high. That was the first time in Bitcoin's history we had done this. This essentially is in 2013, we had an all-time high of around $1,163. And then in 2017, we pushed up to the $20,000 level, right? I think it's a little bit lower at 19,630 USD. And then, of course, what happened is we've gone up into a new all-time high at $69,000, and then we've come down lower than the previous all-time high. That had never happened in the history of Bitcoin. In 2018's bear market low, for example, we came down to, I think it was about $3,000. So you can see it right down here. And so therefore, we can acknowledge that this is also something that hasn't happened in the history of Bitcoin. What does that mean? Well, it means that we cannot just blindly believe, again, that we're going to have history repeating itself when we have introduced these new variables. Now, we can also acknowledge that we've done a few different things in terms of the moving averages as well. And I'm not going to go into all of these things again today. I just wanted to kind of give you a brief summary that, we've introduced new variable data for the history of Bitcoin. We are writing Bitcoin's history right now. So there's a lot of things we have to kind of consider, okay? So let's move on. Let's actually now jump up into our on-chain data for BTC. That's following what is going on right now. I just want to kind of recap just a little bit here. I think it was February, a couple of weeks ago, maybe 3 weeks ago. It's hard to say. Time moves differently for me these days. We saw a lot of analytical firms claiming that Bitcoin whales were buying, right? And that this is incredibly bullish, right? We saw this, I think it was Sentiment put out tweets that, whales are accumulating. And I did put out a statement there when I saw that information that was shared via our Discord server. And I just said it's how they're cutting the data. Essentially, you can make data do some, to kind of give you the number that you're looking for, right? You can kind of make data do these things if you know what you're doing. And what I was seeing was a lot of these firms, a lot of these companies were cutting the data in a way that it made it or gave you the perception that it was bullish, when actually, when you take a look at the raw data, it's very clear that it wasn't. And now we kind of have our on-chain data, we can kind of actually reflect on this, right? And this is one thing why we do this every day, and we kind of reflect on all the recent changes to this macro level data, is we can actually acknowledge that it was never bullish in the first place. This is why we were saying this back in June. We didn't have the right structure to think that June was the bottom, and it just needed a nudge to drop us down into a new lower low. And I'm here saying the same thing again. The November lows do not make sense to be the bear market bottom when A, we don't have a good structure. It is not a 5-wave trend structure to the upside, and we do not have the data on chain that actually supports a bullish movement in the market. Instead, what you actually find is there's a lot of retail money getting FOMO'd actioned in after the DXY dropping, which pushed crypto assets up. So let's talk about this and just a brief update. We've got is inflows and outflows for Bitcoin from the 1st of January 2023. Okay, and then we've got the difference between the two. Now, the easiest way to kind of think about inflows and outflows is supply and demand. Okay, inflows are the supply that is being made available to sell, and the outflows are the demand soaking up excess Bitcoin and putting it into cold storage, for example. It's not a perfect analogy because people will hold Bitcoin on the exchanges, but for the most part, I'd like to think that people have wised up that keeping crypto on exchanges is not a wise idea, and you should be withdrawing it into your own wallet, whether that's a warm wallet or cold wallet. Okay, there's a link to Ledger down below if you're not familiar with cold storage. Check those guys out. There's plenty of brands. We like Ledger. I use Ledger every day. So check that one out if you're interested and if you haven't got one yet. But when you have these two numbers, you have your supply, you have your demand, and then you've got a net positive on the exchanges. That's actually bearish because essentially there's more supply than there is demand, right? And that would be negative. You would see price drop when there is excess supply. So when we have these things, it's quite obvious to us, at least, that this is not a bullish time. This is more of a bearish time. However, there's a caveat to this. The difference between these numbers is only 4,570 Bitcoin. It's very neutral. Okay, so it's not bullish, it's not bearish, it's kind of just waiting for the next big catalyst. And considering all the negativity with what the US are doing, I would say that yes, the attacks on Binance, the attacks on crypto exchanges, stable coins, and various different things that are going on, I think there's going to be a catalyst that does negatively impact the market, which will take this into more of a bearish state than this neutral state that it's currently in. What we can see, of course, on the two graphs is that Bitcoin's balance has been going sideways since December, okay, we can see that here, that on exchanges, they've not gained, they've not lost, okay, but there's been a lot of accumulation, okay, and the accumulation has been happening at the retail level, which means there's equal buyers and there's equal sellers, and we'll get into that in a moment. Now, over on this side, we have the net difference between the inflows and the outflows over a 30-day average. This allows us to kind of zoom out and just say a bigger picture. What does the movement of Bitcoin look like? Well, it looks pretty bearish, right? Over here, during the FTX saga in November, December, there was a lot of withdrawals from the exchanges. That would be more bullish because essentially there was a shrinkage of the supply on exchanges, and that's usually a very good sign. However, it's flowed back onto the exchanges, became very neutral, and you can kind of see that right in there as well. I will say that Bitcoin on exchanges has reached 5-year level lows, right? In terms of the amount of Bitcoin on exchanges. Obviously, it's been going up since December in terms of the amount of Bitcoin on the exchanges. I think the lows were, December 2022 versus 2018, I think was the actual data range. But for the most part, yes, there is a shrinkage of supply for Bitcoin on the exchanges. This is twofold for a couple of reasons. One, obviously, it's compounded by people getting a little bit more aware that exchanges might not be the best people to be custodians of your cryptocurrency assets. And of course, then we've got shrinkage of exchanges as well in places. So there's a couple of things with that. It's not as easy to say you've got shrinkage of supply overall. There's lots of reasons why you see shrinkage of supply. It's positive, don't get me wrong, it is a positive, but we should be reflecting on where that Bitcoin has gone, right? There's definitely pockets of supply, as you can see down here, that hasn't moved from wallets in over 10 years, right? 13.73% of Bitcoin's supply, right, hasn't moved in over 10 years. So it's important that we reflect on where that's actually gravitated towards. Old Bitcoin holders from 10 plus years ago, where, you know, one Bitcoin wasn't worth an awful lot, maybe was forgotten about, right? And so over time, there's a lot of historical Bitcoin that just kind of ends up getting forgotten about and lost. And so there's a huge pool of Bitcoin that essentially just may never actually come back into existence. So although that supply is shrinking over time, it might not actually be that positive if it never kind of comes back into the ecosystem in any way. But nonetheless, a shrinkage of the supply is a positive. So we have to kind of take the wins where we see them. Now, as we kind of move on, we take a look at the wallets, we can see that there are several different sized wallets, right? Different participants, different demographics. And we're going to start here. Bitcoin Dust. Bitcoin Dust essentially is a wallet that has over 0.01 BTC. These are the most vulnerable retail investors. These are the people who are dabbling a little bit and the ones that are probably going to get wrecked the fastest. They're the ones that are going to be over emotional, react to price movements, but also at the same time, these are the people who maybe, because they don't have terribly too much to lose, it's not the end of the world. There are going to be a variety of different personalities, traits inside this bucket of wallets. Some will be very vulnerable, where they have invested potentially all they could afford, and if they lose that, that is a pretty significant hit to those individuals. And then there's people dabbling who it doesn't really matter too much, it's just play money kind of thing, gambling essentially. And so in here, we have seen some extreme emotional overreactions. Okay, we can see that right in here. So we were 11,588,000 wallets. We dropped down to 11,472,000 wallets. Okay, so we can see that we dropped down 110,000 wallets, for example, right? And now we're right the way back up here at 11,574,000 wallets. So we can see how these emotions, they kind of came out and they came back in. These are people who don't really know what they're doing, and they are just reacting. And overly too much so. Okay, and this is usually as a recipe for disaster. Now, we watch this one just because this gives us a little bit of a heads up as to what happens with the other retail investors. We have Krill, which is over 0.1 BTC, Shrimps over 1 BTC, and Dolphins over 10 BTC. All of these are retail investors, but of a different demographic, I guess is probably the easiest way of describing it. Essentially, we've got Krill, which will still be over emotional and will react. They've invested some. It might be meaty amounts for these individuals, you know, $3,000, $5,000, and whenever they decided to buy Bitcoin, right? If they bought it at $50,000 a coin, or they bought it at $30,000 a coin, or whatever, right? Essentially, these are people who have invested a sizable amount for those for them. Okay, they are very vulnerable still and potentially do act emotionally. The same with the shrimps. Again, they will act emotionally. They've invested and kind of finally accumulated 1 Bitcoin, a lifelong goal, for example, for many, which was to get to a 1 Bitcoin status. And then you've got your high net worth individual, 10 Bitcoin or more, the dolphins. Now, all of these will react emotionally to price action. You see this time and time again. Every time moon boys come out and say the bottom is in, you see these surges to the upside, right? And consequently, you usually see them also reacting negatively over time when it hasn't mooned in the time period that they believed it was going to. A lot of these retail investors believe that it's quick money, and it isn't. It's actually got to have a lot of patience, right? Very few people time it perfectly, specifically retail. So these guys, you can see, have been accumulating. They've been accumulating pretty sizable amounts over time. A lot of this is driven from FTX, a lot of withdrawals from the exchanges, right? Now, when we go up into the institutional grade wallets, we get very much the opposite. Okay, so we see retail investors are buying, right? Pretty much at all those demographic levels, they're all purchasing up. And of course, on the larger institutional side, that's not what we see. Okay, we can see that the sharks, they were actually accumulating before the pump, okay, because these are traders. 100 Bitcoin or more shark wallets. These are basically essentially professional traders. That's how I articulate them as. They usually follow price action. And in the case of what they've done recently is seen what is coming in and basically got ahead of that curve. So you can see here they accumulated during December, and then they're taking profits after that pump has occurred, right? You can see them coming down in the number of wallets that they have. Then, of course, you've got the Bitcoin whales, 1,000 Bitcoin or more. And again, these guys have been just coming down, down, and down, and to new lower lows for this bear market. Currently, there are only 2,002 wallets that have 1,000 Bitcoin or more. Okay, and just to kind of put this into perspective, this is a 365-day view of these wallets. Okay, so you can see that these guys have been selling on retail investors for a very significant period of time. This is what the retail investors look like. Okay, retail investors are buying the Bitcoin directly from the whale investor. Okay, these are important things that we have to acknowledge because unfortunately you need these institutional grade investors, these billionaires and these multimillionaires, to be investing in Bitcoin if you want the Bitcoin's price action to significantly rally. If you want to be talking about $100,000 Bitcoin, then you need to have whales invested. You need them on your side. Instead, at the moment, what you're seeing is a lot of retail investors FOMOing in because they believe that a bottom is in and a bottom for the bear market has occurred, and that is exit liquidity for whale investors. Whale investors love to kind of manipulate, trick, and control markets, okay, which is why we talk a lot about smart money concepts on the channel, right? And if you are not familiar, then check out 𝗕𝗘𝗪𝗀.com, linked in the description below. Now, when we see the wallet counts of what's been going on with these institutional grade wallets, then and institutional grade players, right? It's important that we reflect on, okay, well, what do these things actually mean? And we've tried to pull all this data together. What is it that we're really looking for? And for that, we need to also reflect on what happened in 2018. In 2018's bear market, we saw a few really interesting things. Here we can see that the shrimps, these are the retail investors, they were told that this was the bottom, right? So they accumulated. No, then this was the bottom over in April, so they accumulated. Then they were wrong there. All these moon boys were wrong. So no, definitely June, it's the bottom, right? And they start to accumulate. It's not until this flat period over here where faith is lost in Bitcoin that these retail investors start to sell. Okay, they start to sell here. Price goes sideways. Everything comes down to supply and demand, which means if these guys are selling, where is it going? Because price isn't going down. Okay, which means that supply is being soaked up. So if retail investors are selling, you'll guess it right, the whale investors are buying. Okay, so you can see that the whale investors are doing nothing or just kind of coming out and selling or whatever, usually during the bear market. And then, of course, up here, you can see that they're buying during this flat period. Okay, and that is essentially where these retail investors are selling, all the way down into the bottom. Okay, you can see that they start to accumulate just before the final bottom is actually in, and then they can see this kind of move up. You can see them gravitating to the upside. A lot of people mistake, right? They cut this data, they just look at this point here and they say, look, when this first started, when the 2019 bull market started, what we saw were retail investors that started that bull run. And it's wrong. It's not what happened at all. Retail investors sold into the bottom, and then they started to accumulate. Okay, what caused the bull market was essentially that the whale investors had finally got into the market. Okay, do not expect a bullish market until these guys are starting to accumulate at the lows. Okay, they need people to sell Bitcoin to them. Okay, so they need retail investors to sell the Bitcoin that they've accumulated to the whale investor in order for the whale investor to be able to continue that accumulation and continue pushing the price to the upside. Now, the thing that I will also point out is that whales will be selling into the final pump to the upside. Okay, they'll be coming out as price goes up. Okay, and they'll be coming into Bitcoin as price comes down. Okay, these are the things, and this is how liquidity essentially is working within Bitcoin within these larger institutional whales. They can't just simply put an order out there and just go to town. They will remove the price and they'll be paying premium or selling at a loss, right? They need to gradually, slowly come in and come out of the markets. And so for the most part, that's kind of where that sits, right? So when we take a look at our wallets, we can see, okay, well, whales are continuing to sell, right? Again, something that we haven't seen to this scale in Bitcoin's history as a new variable, right? And we're not seeing that big money coming in. All we're seeing is weak retail money coming in. And we can't really go to the moon on retail money. We need to be able to push the needle more significantly. We need to get that momentum in the price action. Do not expect price to move up without big institutional money coming in first, okay? Now, the Kraken-sized wallet in 2018 did this, essentially accumulates during the bear market and then floods the system with excess supply, dragging the price of Bitcoin into the actual lows. You can see here, all of this was accumulating for one purpose: flood the market. Okay, now where are we in our current view for this wallet? Well, they've been accumulating during this bear market just like they did in 2018, and we're waiting for that flood. We're waiting for that bear market low to come on in. So when we take a look at all of these things, it's important that we reflect on them. We understand what the data is telling us, and we make informed decisions rather than just drawing a line on a chart and saying we're going to the moon. So important to kind of reflect on this. Let me know what your thoughts are on that in the comments. Now, in our price action, smart money concepts here, daily chart Binance, we can, of course, acknowledge that a natural corrective state is required. We would be looking to come down to fill these gaps, these fair value gaps, these imbalances in the order books. And all that is fine and not a problem. We should acknowledge that we do still have a bearish state. Okay, we cannot ignore this. We had a change of characteristic up here from the January 2022 low getting broken over in May 2022. We had a break of structure here from our June, confirming our bearish state in November. Okay, so these are basically confirmations that we are bearish, right? We had the change of characteristic, as in we were no longer bullish at this point, and now we confirmed that we are bearish at this point as we come down into those November lows. Now, I will point out that when you have a break of structure like this, typically you do retrace upwards. We've actually gone a little bit deeper than I would have expected. Okay, I wasn't expecting to go ahead and hit the highs that we have done here, but we haven't changed the characteristic. We are still bearish because we haven't printed a new bullish change of character. Instead, all we have is confirmation that the structure is continuing to the downside. So although we have pushed up a little bit higher than I was expecting, we've kind of consolidated right on these ranges here for a bit of a double top, and we should be pulling back down. Typically, you do retrace after you break a structure, but you don't normally see it go as high as that, to be fair. Okay, so some clear examples. Let's see if we can find one that might be a good example on this, which I can't see. Oh, there's one over here. Okay, so we had a change of character. We broke the structure, we retraced, and then we came and broke the structure again to the downside. Okay, so you can see that sometimes you kind of move up. I didn't expect it to go as high as it did, but you can see it kind of quite clearly in there on this daily chart. So for the most part, our expectation is to have a nice healthy correction anyway, whether that just does come down to 19 or whether we come down into new low lows. I personally believe it will come down into new low lows because those institutional players have been selling this entire time. They would have been selling the bottom, and that doesn't make any logical sense or whatsoever if the price of Bitcoin is to actually get significant value added to it later down the line. We would see those guys purchasing up before the bottom is in, and they haven't seen that yet. So all of that is interesting and relatively positive. Now, let me find this chart here, we can obviously see that we were rejected on the 200 EMA. We found the resistance on the higher side, and we went through these numbers the other day as well. So again, we are looking for a cascading effect, but each of these are levels of support all the way down to a range which is absolutely brutal, 6,590 to 7,681. Not expecting it to go that low, but it's there, and we should acknowledge that it is there. Really looking more at the range between 11,600 and 13,900. This is the area that I'm more comfortable with. But as you can kind of see, this particular retracement that we've had is a big reset. Like I said at the beginning of this video, looking at this graph, we've introduced new variables that haven't been seen before, and we should be aware that that is going to create new data, new history written for Bitcoin. This could be a big reset for BTC that we then look at going forward as a new anchor point, whether we become 3-4 cycles in, that we have these bigger corrective states. It'd be interesting to kind of see how it all plays out, but for now, it does look pretty bearish from where I'm sitting. Let me know what your thoughts are in the comments down below. Really interested to get your thoughts and opinions on BTC. If you haven't yet joined us in Discord, check it out. If you're looking for a little bit more, why not become a member here on YouTube or on Patreon? Link it via Discord, and I tell you, it's like Pandora's box opens up to you guys. Check it out if you're interested. If not, don't worry, join Discord anyway. It's completely free. Until the next video, have a fantastic day.